Okay, so we are live, but hope you having a great Tuesday on this 12th of January.
Was good. Second, I'm letting everybody on Instagram know we on here now.
How you feeling over there, Shaquanna? You done shook the corona off?
Yes, I did.
You look overwhelmed. You all right?
I'm not okay. Send help.
What type of help? You want like actual mental help or you want some wine? Like what you need?
I need like wine help.
Okay.
Yeah. I need maybe like a few more employees help. That'll eliminate a lot of things for me.
Yeah.
No, it's okay. It's okay.
Gearing up for tax season 2021. I already know it's going crazy.
Tax season since like November. So it's kind of how it goes. I don't know. This year tax season for me started a little early. And now we have they did me a extra favor of giving out PPPs and EIDLs and all that stuff. So now that's more work. And so I'm like gearing up for one thing, and so now we have another, but it is what it is. It is what it is. I don't even have time to take down my tree. Like, I don't even know when the tree is coming
Oh,
down.
I thought you could.
I can't hear nothing, my brother.
Hold on. Let me fix this for David.
Shaquanna, also, I want to hop on live on Instagram for like the first few minutes of it, then we're going to hop off.
Okay.
Okay.
Oh, you want me to join too?
Yeah, I'm going to get you to join.
Oh.
Yeah,
I'm like, okay.
give them a little taste and tell them to come on down.
To YouTube time.
Gotcha.
What's up, Valisha? How you doing?
Let me
What's good to the YouTube family? Hope y'all doing well out there today. We got a very special segment for y'all today.
Another Tax Talk Tuesday.
Yeah, another Tax Talk Tuesday. We taking it to YouTube this time. We got
are you guys on?
I'm about to get on right now.
Okay.
he's not on YouTube yet. We're talking to people on YouTube though.
Oh, okay.
Whoa, what's good? Instagram. I can't put the phone right there though.
I don't need to be in the phone, bro. You could
Bam, bam. All right. We're gonna do it like that. What's good, everybody?
You don't want any part of this?
I mean, I'm cool.
What's
I'm
good,
just
Instagram
trying to
family?
minimize how
I'm gonna
much.
use the computer.
Yeah, I'm
Here
just
with
trying to
Tax
minimize
Talk
what's going
Tuesday.
on.
About to get our girl Shaquanna on here. We doing Tax Talk Tuesday.
Valisha also says hello, Miss Business.
Got a really great show planned for y'all today. We're gonna give y'all some game on what's good. How you doing, Shaquanna? Got it. Let me turn my audio down on here too. We don't get no feedback.
Yeah, no feedback.
But what's good, Instagram family? Your boy David with Black Wealth Renaissance. We here with Miss Business. We are live on YouTube right now. We got a show planned for y'all today, Tax Talk Tuesday. We're gonna be going over a couple things. We'll be talking about business formation, and we're gonna be giving y'all an update on the PPP. Then we're gonna get some Q&A with Miss Business. You know, she always got the game. She always giving out the game. She's that lady when it comes to business. So how you doing, Shaquanna? Hey, I feel it. That's good problems to have at this time. You know, the reason you having these problems is because you the problem solver for so many people. You helping so many people get their stuff together with business. And I gotta let you know on their behalf that we appreciate you because you really do be helping educate the community when it comes to this stuff. So just know it's appreciated.
Hey. And ask her to unmute on Zoom because we can't hear.
Hey, Shaquanna, can you unmute on Zoom? Okay, yeah.
Yeah, because on YouTube, they can't hear you on YouTube, with you being muted on Zoom. If you want to though, just turn the volume down on your phone, and then everybody will be able to hear you.
Gotcha.
Yeah.
I got it. Boom. All right, I'm gonna turn my phone down.
Wow.
All right.
All right.
So
Everybody good now?
no, it's echoing, right?
Yeah, still got a little echo.
Let's see.
Is that better? No.
If somebody didn't forget their headphones, we could have had this problem fixed.
Hey man, look, I'm sorry, y'all. I forgot my headphones on the YouTube side. And for everybody on Instagram, look, this is gonna be on YouTube, this whole live. We just want to let y'all guys know that this is where it's at. So we having this feedback issue. If y'all want to hop on, y'all go over to our YouTube channel. Y'all click the link in our bio. It's the first link in there. You just click it and you're gonna be able to access this. Go to the live with us and Miss Business. Y'all check that out. Go to the live with us and Miss Business. Y'all check that out. Okay.
Wow.
Yeah. So, all right, we're gonna hop off the Instagram live right now. Y'all go to our YouTube channel. All right, well, I'm about to end the live. Yeah.
Sorry about the technical difficulties, everyone.
Yeah, sorry about that. I did forget my headphones. That's on me. That's my blunder.
It's all good.
But yeah, we very glad to have you on today. And we just want to kind of talk about a few different things. The first thing we really want to get into with this Tax Talk Tuesday is talking about business formation. I know that's a subject that like you speak on quite often, like just the importance of going as a business owner and telling, like making sure you have the right entity set up, making sure you have all your ducks in a row so that you're being taxed efficiently as a business owner. So one of the first questions I have for you is something that we get a lot from a lot of new business owners is like, whenever they had that first idea, like how do they take that idea and get ready, like set up to turn it into a business? Like before they just even have a product or anything, what are some steps they need to take to make sure they have this stuff laid out so they can run it right from day one?
Got you. Steps. Okay, so I always think, I know a lot of people may not agree with this, but I think that you need to fully think out your business before you register your LLC, before you register your corporation, right? Because a lot of people run out and they form businesses and they form, they run out and do all these things, but that's how people wind up with like 6 different LLCs and no real business, And so I think that it's important. First thing, decide that you want to be in business. Make a conscious effort and decision to say, you know what, I want to be in business, right? So that's the first thing. It's the mental piece. Then the second part is, okay, now we have to start talking about protecting what we are actually creating, right? And so I think if people thought about it a lot, thought about it in a sense of, okay, this is going to be big, this is going to be long term, we wouldn't have so many people operating their businesses like hobbies, where they're not registering their businesses, they're not taking the steps to, trademark their businesses to make sure that their name is theirs. It's just like building a house. Like you would never go buy a piece of real estate and that doesn't have a foundation, right? Because the entire house will fall, right? That's with anything. You wouldn't, do that. So I definitely think that it's super, super important to register your business and then also have the conversation about what that means, right? So everyone always says like, yeah, LLCs are really good for, I want an LLC, and I always say this, I get this statement all the time. I want an LLC because I want to protect, I don't want to be sued. And that's great. Like that is definitely one of the reasons why you should have an LLC.
You're on the right track.
You're on the right track. But the other reason why you should consider an LLC and thinking about it is from the tax perspective. What does it mean, right? And so just to kind of get into, the different types of structures, just for people who are not aware, you have your LLCs, you have your S corps, you have corporations, You have, sole proprietorship. And that is, and for those of you who don't know, when you are just operating your business and it's just you and you haven't registered your business, you are operating as a sole proprietorship, right? So that is extremely important as it relates to, and that is extremely important as it relates to just kind of getting in that space of figuring out what does those entities mean to you from a tax perspective. Keep in mind, an LLC is not a tax structure. It does not allow you any additional write-offs or any additional expenses that you can claim just because you're an LLC. So then when you start having that conversation of saying, okay, well, I have my entity as, an LLC. Sorry. So I have my entity as an LLC. What does this mean? And so I think if a lot of people understood that their entity has a lot to do with how they're taxed, I think that a lot of people would approach it differently and be willing to have that conversation up front. So I think that that's super important. I know how I am. I don't want to get into any questions. So I'm not going to break it down yet because I'm sure that that's a question. Yeah. But you can. I'm not going to do it.
It's all good. And like you mentioned, when you touching on that LLC piece about it not having any tax benefits, could you go a little deeper into that? Like, why is that you don't really receive benefits for just having an LLC?
So you don't receive benefits for being an LLC because, all right, so when you are an LLC, again, LLC is not a tax structure. LLC is more of a legal structure. It's going to protect you against liability, right? So it's not a situation where you are forming an LLC and it's going to allow you additional tax write-offs. Now, if you're looking for those structures that's going to allow you additional tax write-offs, now you are, going into like the S corporations and you're going into the corporations, right? Those from a tax perspective there's different things that can be done in those entities that will allow you to write off additional things that an LLC will not, right? And so again, and I think we need to back up for those. I feel like we are speaking as though everyone understands what those deductions are, what those tax write-offs are. And I think let's back it up for a second and just have the conversation and just say, first of all, when you have an LLC, when you are operating as a business, you are allowed to, and again, I say it's the beauty of being a business owner. When you're an employee, when you're an employee, you get taxed first and then you get to spend what's left. When you're a business owner, you bring your money in, you spend it, and then you get taxed on what's left, right? And so that's really the difference between the two. Now, when you have your
escort?
No, not your escort.
Expenses.
When you have businesses, so when you're operating a sole proprietorship, no matter what the entity type is, you are allowed to account for your revenue, and then you are allowed to write off expenses because I get that question a lot, like, what does write off expenses mean? Right. So I think when we have that conversation, we automatically, assume that people understand and know exactly what we mean when we say, write off expenses. So, deducting your expenses. So anything that you have spent in the business, you're able to deduct. And so that is a deduct against your revenue. And that is extremely important to know. So let's just say hypothetically, you brought in $100,000 in your business. However, if you spent $90,000, your profit is only $10,000. You're only going to be taxed on that $10,000. So when I say that there's no difference in the things you can write off on an LLC side versus on a sole proprietorship side, I mean the line items in terms of what you can write off, it doesn't differ. Now, when you have corporations and you have S corps, you have things where, like, let's just say, for instance, like you're able to, for an S corporation or corporation, you're required to have board meetings. So if you decide to have those board meetings, you are allowed to rent out your home, right? So that's called the Augusta rule. So what's so amazing about the Augusta rule is you can rent out your home. So what's amazing about the Augusta rule is you can rent out your home to your business. However,
Wait. Hold
busting our
on.
head over here. This
so
is
listen, the Augusta rule, you can write off a portion of your home. Like basically you can rent your home out to your business to host your board meetings. Right. However, the beauty of that, because typically if you are bringing in, let's say you have an expense on your business side and you're giving it to your personal side, what happens then? You're now creating income on the personal side, but no, you're not creating income on the personal side because according to the tax law, if you rent your home for less than 15 days of the year, it's tax free. Right. So, well, not your, well, yeah, if you rent a home, your investment home, your home, if you rent that home for less than 15 days of the year, it's tax free. Right. So with that being said, right there, that's something that you can do on the S Corp side that you can't do on the corporate side. Right. So now let's take it to corporations. So now we have corporations. Trump is leaving. He took tax rates for corporations down to 21%. Right. So that means
talking about
flat
something completely
21%.
different.
Biden is about to come in and tear it up. Biden is taking it up to 20, it's taking up to 38%.
I thought he said something like, I think he was pushing for 39.
Yeah.
Something like that. I remember people were mad because he was like, man, that's damn near 40%.
We'll see when he gets in office, honestly. Because he can say anything he wants, but the reality is until he actually gets in office, that's when we'll see exactly what's happening. What's happening there. But from what I'm hearing, it's supposed to be 28%. So we'll see. But saying all that to say, when you are a corporation, you have that flat rate of taxes that you have to pay on whatever profit that you make. When you have LLCs, S Corps, what happens is those entities are pass-through entities. So what that means is all income that you make on the LLC side, all income that you make on the S Corp side passes through to your personal taxes and then you're taxed there. So when you're taxed there, because you're being taxed on your personal side, personal taxes, it goes by brackets. So you can be paying up to 35%, 38%, right, on your personal taxes, depending on where you fall in that bracket. So let's just say somebody that is making, I don't know, $1 million net a year. It may make sense for them to be a corporation, right? It may not make sense for them to be a pass-through entity because, let's say right now, tax law 21%. You are better off paying that 21% than paying, the 30, the 35.
Whatever, yeah. Because you go, right? Like you said, it's showing up higher because you're getting still taxed like you were an employee almost. Because it's like you said, it's passing through to your personal side.
Yeah, it's passing through to your personal side. So that's important, right? That's important to really take notice of as it relates to, choosing an entity, and all of these things play a part. The IRS, the only thing they want to know, and the only reason why you have your EIN is because they want to know how to tax you. They want to know which tax returns you are responsible for filing. And keep in mind, I just put out a post today of just like all the deadlines. Those deadlines are extremely important, right? So personal and corporate, April 15th. For S corporation partnerships and 2+ member LLCs, it's March 15th. For single member LLC, is April 15th. Keep in mind that those dates are important, especially for 2+ member LLCs and S corporations, because the fine for not filing is $195 per month per member. So if you're, it gets very expensive not to be in compliance. And so that's why, I try my hardest to like pound it in people's heads, like you need to file your taxes. And if, for whatever reason, it's January now, if your stuff isn't going to be ready by March. If it's not going to be ready, then just file for an extension. You'll get an additional 6 months. But that's,
that can save you a lot of money too. Think about that. You said $195 per member per month. So at the bare minimum, you got 2 people. That's what? Basically $400 a month.
$400 a month.
You're looking at $2,500 damn near. And you could have just saved that by being aware of this information she just said. Y'all need to write them deadlines down.
Deadlines are super, super important. So important.
Hey, I know you've been writing stuff down over here, my brother. You got a question for?
No, I actually been getting the live set up. I'm sorry, y'all. I was making sure y'all could access it from Instagram. My fault, y'all. But yeah, I was getting y'all right on the Instagram.
It's all good, my brother. Cause I'm glad we talking on this though, like with this idea of it, because you spoke on it, I think last time we were here. And the idea of just selecting that entity type. So I kind of want to ask, like you touched on it with that example of the person with $1 million, but how would you know what entity type is right for you?
That's a discussion. No to people's situation. You guys are a part of BWR and you do have two very different situations, right? So no two people are the same. No two businesses are the same. What I do like to tell people, if I had to give like rule of thumb type of situation, if you are going into real estate and you plan to hold long term, an LLC is fine. I like to stay away from filing Schedule C's and Schedule E's. And so what that really means, those are the tax forms that you have to file when you have a single member LLC or when you have your real estate in your name. And it's just you. I like to stay away from those only because I feel that it increases your chances of getting audited. So I like to stay away from those. So if you can make your entity a 2+ member LLC, it's better because of the way that you file your taxes, right? So when you file your taxes, you have the, when you file your taxes, let's say you're a 2+ member LLC, you first have to file Form 1065, and then you file your personal taxes. So it's like you're separating out all of your expenses, opposed to it being a situation where you're just filing all of your income and all of your expenses on your personal taxes, and it just leaves too much. And the IRS is planning to double their audits this year. So
oh wow,
there's a lot. They plan to double it. They've been increasing their audits year over year, and I think the reason why they do that is because there's so many new freelancers and contractors and Uber drivers, all these things. And so I think that that's how they are, kind of cracking down. So they were up to about maybe like 5-point-something% out of all tax returns that are provided. So I'm hearing that they're trying to double it. So it's important that taxes are filed correctly. It's important that taxes are filed accurately because they must be low on money.
Yeah,
all that money they gave out.
Well, they ain't give it out, but yeah, the government got to try to get it back some way, right?
Yeah, they sure do. And I heard you mention like try to make it a 2+ member LLC, and I just kind of want to go a little bit deeper into that. So does that mean this person has to be a part of the business? Would you recommend them going in with a business partner, or can you just maybe add someone who's not really a part of the business but still add them on the LLC? Because some people might be thinking like that.
Got you. So I added my brother. I gave him 1% of my business when I first started out. I gave him 1% of my business, so he has 1%. I have 99%. If you have children, I have clients that have children. They'll add their children to the business and maybe give them a very small percent. It can be 1%. But again, I don't recommend, and this is, oh my God, I absolutely hate when people organize partnerships for no apparent reason. And no apparent reason meaning that everybody's sitting in a room and everybody's like, oh yeah, this one person that is the person that has the business mind says, yeah, we should do, like, you want to do this business? It's like, do you really need to do that business with that person? Probably not.
No.
But you're just bringing them on because you feel like you need company. And I feel like that needs to be more of a conversation because, I'm the accountant, so I get everything. But the reality is,
not everybody built for this.
People need to be able to do things by themselves and understand that, not everyone needs a partner. If you have a partner, they need to show you why they're your partner. They need to benefit, right? Like Jalen over there getting the live together. You talking to me.
Yeah.
Jared got his part. Kelly got his part, right? You guys all collectively come together and contribute to the business. I see so many times where there's partners that's not contributing. And a lot of times people are like, oh man, I have this partner and they're not doing anything, but yeah, I have them on the business. And it's like, but why? A business is a lot of work. Like it is a lot of work, it's dedication. You don't need people that's iffy. You don't need people that's not going to contribute. They have to add value. If they add value, give them equity, no problem. But you can't just go around just being like, hey, you want to start this business? You know how many friendships I see tear apart during tax season? Crazy.
Sure, it's a lot.
I could believe it. And I'm glad you brought that up.
Before you change it though, like I just want to get a little bit deeper into like this 1%, like and 99%, and like saying that you don't have to form a partnership, because I know like so that wouldn't be a single member LLC, but that would it be considered a partnership even though they still have that 1%?
Absolutely.
Okay.
As long as there's multiple members within the company. Absolutely.
Okay, and whenever you're filing your taxes, then like you said, it'll be broken up. So you would claim 99% of the taxes on your filing, and they would claim 1% of the taxes on their filing?
Yep.
Okay. I
And
just
keep
wanted
in
to
mind,
clarify
yes.
that for anybody who was out there maybe confused about it.
And keep in mind, if you have to file as a single member LLC, I totally get it. If once you start operating at a profit over a certain amount, and I usually give like a rule of thumb of about once you're operating about $30,000 profit, it may be time to become an S corp, right? So that is the conversation that you definitely should think about or have, because those, then that kind of will change you from a single member LLC to an S corp, and then you're filing your taxes, in a different way. So I just wanted to throw that out there because, I put that out there all the time. And then I have people contact me like, I know you said that I should be a 2+ member LLC, but do I have to? And it's like, no, you don't have to, but I'm going to give you what I think is best and what I know, especially let's say from an audit perspective, partnerships, S corps, corporations are getting audited a lot less than personal tax returns, so that's the reason why I say that. And I also think when you're organized, let's say it's a corporation or S corp partnership, you just start to do things. You start to do things and structure your business and start thinking about things in a different manner. It definitely helps you because like just your bank account, I'm sure in your business, right? You guys are thinking about the terms. Who gets what? How is this going to happen? What's happening there? I just think that it furthers the conversation. And like, that's even when it comes down to, let's say like bookkeeping, for example, with clients, they'll be like, I just started. Do you think I need bookkeeping? Yes. Because you need to start, you need QuickBooks, you need something. I would like, listen, go on my website and just get the QuickBooks. You don't have to hire me as a bookkeeper, but you need QuickBooks because it allows you to start having the financial conversation. And that's what it's about. It's about us being able to start having the conversation to make it the norm. Profit and loss statements, the norm. Balance sheets, the norm. Really understanding what these things are and just being able to, fluently speak about them.
Before I go to my next question, I see somebody in the comments that had a question. So if you add a non-contributing family member as a 1% partner, how involved would they need to be?
They don't have to be involved.
That's why they 1%.
That's their 1%. They have no voice at all. They like, even if you give somebody 1%, they might as well just be quiet. They don't have a voice.
I'm glad you spoke on that, the idea of like with the corporation setups opening up that financial conversation for businesses. Because like even when it comes to the whole setup piece, you mentioned earlier, like how during tax season you see a lot of friendships fall apart because of bad business setups. It made me want to speak on operating agreements when it comes to getting businesses set up. It could you kind of explain to people what an operating agreement is and why it's important in setting up a business?
Okay, so operating agreements are important because it pretty much just details out the operations of the business, right? So you are saying on a day-to-day, this is how the business should be ran, and this is in the way that we're going to conduct business. I always encourage partnerships especially, if you're a corporation or S corp and it's just you, yes, you need those things as well. However, when you're a partnership, it is extremely important for you to go through those terms, because guess what? Emotions and business does not work together. So when you have people and they have emotions, they may say, no, but I feel like I should get this, right? So everyone always feels like something. I feel like I should get this. I feel like I'm entitled to this. But when you start your company, if you say, you know what, when we do this, we're going to split it by ownership percentage. Okay, you're going to get a bonus, or this is how we're going to split it. And this even relates to real estate. Like when I spent my time in corporate and I worked in real estate private equity, that's what I had to do. Before starting, I had to look at the operating agreement. I have to know what the terms of distributions are. That's important too. And also, if you guys are going to dissolve the company, how long do you plan for the company to last? Is it a forever kind of company? Or do you give it a certain amount of time? When do you give out distributions? Is it a certain period? If someone wants to leave the company, do they have to get approval to leave the company? Do they have to sell their shares? All of those things have to be communicated in the operating agreement, right? So it really is just like those day-to-day operations of the business needs to be detailed out in that operating agreement. And so that way, once emotion comes, there is no emotion. We agreed on this percentage. We agreed that this is how we were going to, conduct closings. This is how we agreed we were going to, split whatever it is. And that is super important. And that takes the emotion out of it and put the business back into it, where that's it. So operating agreements are really, really, really important.
I thank you for speaking on that, because I know like that is something that whenever we first got in the business, we didn't understand. Like, you see it whenever you sign up and they tell you, hey, you really don't need to do this right now. So a lot of new business owners, it kind of just gets pushed to the back of their mind. And whenever that time actually comes where they're going to need something like an operating agreement, they don't even know what it is to do that. So I'm glad you spoke on it.
Or a lot of business owners that like take it upon themselves to like form their entities themselves, and then they never get all of the support and documents that they really need to be in compliance. So I have like a ton of clients that all the time where they'll come to me and they're like, yeah, I have an LLC, but I never did my, operating agreement. I don't have any sort of capital contribution forms. Like all of those things are super, super important.
And we got a question from Drake. Drake on YouTube asking, does the multi-member LLC work the same way if the other person is your spouse and you're filing jointly?
Yes. So if you are married, when you form your entity, you have the option of either having your business recognized as a single member LLC or have it recognized as a 2+ member LLC. So if you are married and you decide that you want to be a 2+ member LLC, you absolutely can be a 2+ member LLC. Just have to make sure when when the EIN is created, that it's created properly.
Okay. We got some questions rolling in now.
Yeah, I know she said something about compliance too, and I did want to get back to it. Just like maybe like a checklist of things they need, or topics that business owners need to be familiar with when it comes to being in compliance.
Okay, so starting from the top, you need to register your business. You need your tax ID number. You need your business registration. You need to make sure that you have a business bank account. Keep in mind, people don't realize a business bank account is a requirement. You cannot operate your business out of your personal account. That is commingling your money. And if in the event you were ever audited, you cannot go and give the IRS your personal bank account for your business transactions. Your business is a whole separate entity, right? So you have your personal transaction, your business bank account. You definitely need your supporting documents like your operating agreements and bylaws and meeting minutes and all of those things. You need that. It was another thing. Bookkeeping. I need people to understand that bookkeeping is not an option.
Talk to them.
It is not an option. If you are running a business, you need bookkeeping. You need to know where you are. How are you? You need to.
Message.
Yes, you need it. Right? So you need some sort of Jared, I'm sorry, I was screaming in your ear, my bad.
Nah, my bad. I thought my
This
roommates was
touched
trying
our
to talk to
soul,
me. Nah,
y'all.
you good.
Please get that
Okay.
bookkeeping.
Y'all, it's gonna save you so
Please,
many
please,
headaches.
please. I'm like super passionate about this because, we'll get into this all these PPPs and EIDLs and all that stuff. But when I was doing it last year, it just kind of broke my heart at like the amount of people that just wasn't prepared. And a lot of people missed out because they didn't have their bookkeeping together. They didn't have their payroll together. They didn't have their taxes filed. It was just, just a bunch of people not being in compliance. But your taxes filed. Okay, so now on the taxes side, let's talk about a few different types of taxes that you have to file. Your income tax, everyone knows about income tax, right? That's what we've been discussing. Some people have sales tax. That's important. Depending on where you're located, sales tax is due once a month or once a quarter or annually. It really depends on where you are, where you're located. Every state has different sales tax requirements. So that is important to have your sales tax paid. The next thing that no one talks about, which I need to make it my business. When I find that people don't talk about things, I'm like, okay, that's my business to talk about it. Franchise tax. Every state has it. Every single state has a franchise tax, and every single state, every single person that has an LLC, has a corporation, or an S corp has to file their franchise tax. So, for instance, in California, franchise tax annually is $800. You have to pay that every single year.
Just because you have a business structure?
Yes.
Wow.
New York, $25, right? So how franchise tax work, it's pretty much like the state tax for you having the entity. So how it usually works is, and I'll use California just because California is the most extreme. So I'll use California. California has a minimum of $800 that you have to pay. All right, so with the $800 that you have to pay, they have, it pretty much is a calculation where it is the lesser of, I think it's like 0.5%. I can't remember the exact percentage right now. For whatever reason, it just lost my, kind of left my mind. But basically how it works is the minimum you can pay is the $800. So whatever percentage, let's say if it's like 0.5%. So up until you get to $800, you can pay $800, right? So whatever that percentage is based on the profit that you generate in your business times the percentage. So up until you get to $800. Now let's just say more, and I did the calculation. So basically you can profit up to about $56,000 for you to make, to have to pay that $800 in California. Outside, anything above that, you have to start pay. It's basically going to come out and calculate up to more than $800.
Yeah.
So now you're going to be paying more than that, right? And so no one talks about franchise tax. A lot of people, entities, become dissolved because they're not filing their income tax. Their franchise tax. So that's important.
That is.
Yeah, I didn't even know about that one.
You got us concerned over here. Me and Jalen, we got a old LLC that we still got to get dissolved that we never really did nothing with. Now we like, damn.
And they let the fees accumulate. Yes, and they let the fees accumulate. So make sure you guys check on that. Which state is your
Louisiana.
Yeah, it's in Louisiana.
Louisiana. I think you guys franchise tax is like $50.
I know it's probably not high. Louisiana,
Yeah.
they on that bullshit when it comes to taxing businesses and stuff. I ain't gonna get into that though. It's a reason Louisiana look
That's
bad.
a whole nother video for a whole nother time.
Yeah, we'll talk about that later. We got some questions before we move on. So one of them was, so the operating agreement can be updated whenever it needs to be, correct?
Yes, the operating agreement can be the operating agreement can be updated whenever the partners need it to be. But again, that should also be a conversation, right? So everything needs to be thought about. If you are going to amend the operating agreement, who needs to vote on it? How many people you guys gonna do by ownership percentage? Is it just an automatic conversation? That needs to also be detailed out, because again, once emotions start running rampant, somebody may be like, I want to amend the operating agreement. But again, you may be, let's say in you guys' situation, right? Like Jalen may say, yeah, I want to amend the operating agreement. But
I
if the
want
other
all
three
of
of you, if the other three of you are like, yeah, no, then
That ain't happening,
no.
homie.
And that's the power of voting. And so that's why, shares and ownership percentages are so important, because they hold power.
Goes back to what you said at the beginning of this thing. You got, before you getting into that business, really thinking it all the way through, not just looking at it for what it is right now, looking for the next sale, thinking about the next hustle that you got, thinking on it on a grander scale, like, how can I keep this and grow this for the long term?
Can we talk about one more thing since we're on business?
Hey,
yes.
And I have things to say.
Do you?
I talk about taxes so much that when I get to actually voice my opinion about other things, I'm like, yeah, let's talk about this. Hold on, what did you say? Oh my God, it just left my mind. Say it again.
What did
you say?
wrong one. You got the wrong one. Oh man. So I was talking about businesses not thinking it through all the way from the beginning.
Oh, yes.
Having that
Okay.
short-term mentality.
Got you. So what I want to talk about is streams of income, right? So there's always people, and there's always these posts and always these things about, oh, you need 7 streams of income. You need 7 streams of income. What I find is that people do not suck the streams out of the business that they're currently in before they try to think about starting a new business or getting into some sort of another investment before they're trying to create a whole nother stream of income. First of all, streams of income, contrary to what the internet is telling everybody, takes a lot of energy, a lot of effort, and a lot of time. Creating passive income is hard. It is hard. It takes a lot of work. And people just always like, oh, I need this passive income. You need to first figure out your active income. You then need to figure out how to create passive streams from the income that you already have, and then move on to something else. I find that people are so content with doing things at 50% and then jump into something else. Like, I'll have clients in a business, they'll be in a business for a year and they're like, oh yeah, I need to start another business. Why? Do you actually know how long it takes to actually start a business and have it functioning properly? So I'm super passionate about this, because I'm like, so who's going to tell people that they need to like make 7 streams in their business
vertically
that they're already in before they then try to go out and create 7 new streams of income that they probably not even passively in those businesses, they actually actively in their businesses. So I think we gotta have a passive income.
I love it.
Yeah, me too. Like,
you 7 income streams don't mean 7 different side hustles.
Nah, it doesn't.
That's what people do. That's what people do. They're so like, I think that there's definitely a lot of like, miscommunication as it relates to and surrounds what it takes to actually make it, and what it takes to actually make things work and make things operate properly. And I think that people don't spend enough time putting in place processes and procedures and really looking at their business, extracting out all of the different streams of income. Do you know how many times I evaluate my business and I'm like, hold up. Every time a client asks a question, I'm like, is that something we want to do? It's like, is that something I want to add? Can I add value in this place? How can I add value? So it's a situation where like, I'm about to start filing franchise taxes. You know why? Because don't nobody know that they got to file franchise taxes.
People like us.
Yeah, like
it seems like that, where it's just, just kind of taking time to sit in your business and see what it needs to grow. And so many people are just like, oh, my business isn't working. It's because you're not listening. You're not listening to your clients. You're not listening to, if you have a post, what people are liking, right? Like, I had an idea and, someone asked me like, is that not even, who asked me that? Oh, King Ashley Ann. I was talking to her and she's like, do you see that as a problem, or do your clients see that as a problem? I was like, oh, okay. That's important. You got to understand what people see as the problem. I'm in accounting, right? I have seen accounting from new startup businesses all the way up to corporate making billions. So for me, where I may see a problem at, my clients may not see a problem. So I have to make sure I'm serving their problem while also adding value where I can to help them grow, right? And so that's definitely it's a thing. It's a skill, but I just had to get that off my chest.
Nah, I'm glad.
Thank
you
you guys
said
for allowing
that,
me to
though.
talk about something else besides taxes.
Oh
Hey,
no, I'm glad you said that.
this is necessary. Yeah.
And David said it earlier, like vertically integrating is much
Yes.
easier to create a new income stream in the industry that you're already knowledgeable about also. Because like you're saying, with these franchise taxes, this is something you already know. It was just a service that you wasn't offering, but it's something that you already knew.
Yes.
So it's a whole lot easier
Adding things that are
to add
complementary.
something that's already within your field and within your space. And I got one more question for you from the chat on YouTube. So my boy or my lady, I don't know what they are. Sorry. I hope I'm the lava heat. They said, what if your LLC is from another state and you reside and do business on the West Coast, meaning that they have a Montana LLC, but they do most of their business in Los Angeles and none in Montana?
Oh.
I don't like their reaction.
California is greedy. California is greedy. So with California in that instance, you will have to file your taxes for California. And depending on how much you are, and it really depends on how much of your business you're doing in California, right? Because if you are, let's say, again, in that moment, you are kind of seen as a foreign, you're kind of like seen as a foreign LLC in California. They may push and require you to form an entity in California so that they can get their franchise tax, but they're definitely going to tax you. So, yeah.
They want that money. Sorry.
That's my favorite place, Los Angeles. I'm so sad that it's like going through what it's going through right now. That's my
Yeah.
happy place.
I still never go kicking in LA yet. I'm gonna
LA
go
is a
there.
dope city, man. But
Oh, I love LA so much. And if anybody knows me, they know that I love LA. I usually spend like 3 months out the year there, but this year I didn't go there at all. And I'm
that damn
sad.
Patty.
Yeah, that damn pandemic
Yeah.
messed up a lot. I see someone else. They're saying,
I kinda
what
wanna
is her
get-
title? Her name is Miss Shaquanna Brooks, aka Miss Business. And they say, I need to know who to hire. Do I need an accountant or a tax person, or are they one and the same?
Okay, so difference between a tax preparer and a CPA. So in terms of my title, I am a CPA. The big difference between a tax preparer and a CPA is that I'm certified and a tax preparer is not certified. So they don't have to stay in compliance. They don't have ethical requirements that they have to kind of uphold. I have like certifications and things like that I have to comply with every single year. In order to become a CPA, I had to take these really, really hard exams, right? I also had to work in public accounting, right? So there's just some sort of criteria there where with the tax preparer it is not. Now, in regards to what the difference is, do you need an accountant? And I like to just say to people, like I do taxes as well. Like I don't come in, I meet clients where they are.
Mhm.
So let's just say hypothetically, you just need taxes right now. You're at the beginning stages of your business. You don't really need tax planning. You don't need bookkeeping. You don't need all of those things. That's fine. We can do your taxes. With a tax preparer, and I'm sure like there's probably some very phenomenal tax preparers out there that can do your taxes. But what you want to be careful of as you start creating businesses and as you start making investments is you want to make sure that you are investing in a team that can support where you're going and can help guide you. So that is the big thing. There are a lot of tax preparers that will deal with personal taxes, right? Or they may deal with businesses. But and the same thing with CPAs, like, I mean, with CPAs, most of the time they would have had to have some sort of corporate exposure in order to get licensed.
Mhm.
But for the most part, and because what I don't want to do, I don't want to send in my communication that you absolutely have to hire a CPA and like, oh my God, CPAs are so much better. But again, you have to consider who the person is that you're working with and what value they can add to you. If you work with a tax preparer that's used to doing personal taxes, then that's probably not your person. And that's not your person because they can't help you on the business side. They can't help you save taxes on, as it relates to real estate. If, let's say you're trying to invest in real estate, they may not have the knowledge, that just may not be their space, right? Like for me, I thrive in businesses. And I told someone today, we were talking and he was like, do you know your customer? And I was like, yeah, absolutely. I know my customer. So I have a brick and mortar. And last year I tried doing like the cash advance where you can like get cash advance from your refund, whatever. And I realized that is not for me. That is not for me. And some, I know some tax preparers, some CPAs, and that is for them. For me, I like getting in there, holding clients' hand, helping them. I'm not interested. Like some people, like they charge for credits. I don't care what the government is giving you for a credit. I want to charge you for the work that I'm doing. What forms am I doing work for? So I just say, you may not need a full-on accounting, but you need somebody who can add value. And if you can find a CPA that's going to add value, then that's who you should work with. Because if you have a CPA, I have some people that work with CPAs. They're like, yeah, I had a CPA. They never explained anything to me. I don't know why I'm doing what I'm doing. I don't know what's going on. And that's a problem. For me, that's a problem, right? Because you should know exactly what's happening. You should know what's going on. And, you should be able to at any moment, at least tell me what taxes you filed. So that's important.
Yeah.
Hold on, guys. I have to go get my laptop charger because it's about to die on you guys. Hold on 1 second.
Hey, you over here kicking game. What you got,
I
Jared?
do just want to say real quick that like everything she is saying, I definitely appreciate from her. Like I definitely learn a lot working with Shaquanna as far as doing our taxes too. So like definitely you want to work with somebody that's going to be able to explain to you what's going on because without her, I wouldn't even understand half of what we were doing and why we were doing it with Black Wealth Renaissance Taxes. So it definitely, we get a large benefit from working with her as well.
For sure. And I like just to add to that, like what she's saying with that whole idea of like I know she being modest with it when it comes to like the CPA versus
the
the
tax preparer.
I don't want to sit here and like drag tax preparers, but I do want people to understand that these people aren't taught the same stuff that she's taught. They're taught how to use the software. They're not taught how these actual business principles work and these different things that she was mentioning. And Shaquanna, I'm glad we got you back because while you were on that topic, it was making me think that we got to get to like the importance of the CPA when it comes to them PPP loans, like you were talking about earlier, like having that accountant to have your books together so that whenever the time comes, you can actually be eligible. And I just want to give people an update on the PPP, but for those that aren't familiar, I first like to ask you, like, can you explain what the Paycheck Protection Program is and who's eligible for it?
Absolutely. So Paycheck Protection Program. So Paycheck Protection, PPP, which I'm just going to go by PPP after this.
Yeah, that's fine. That's cool.
PPP is a payroll protection program, pretty much a program that was released as a result of COVID relief. Originally, the first wave, when the stimulus was passed back in March, they released, I think, 284 billion. They had released for payroll protection program, and that pretty much was to help business owners sustain their employees, right? Because it was a situation where no one was bringing in money, businesses were closing, and so what the government wanted to do with this program specifically was help businesses sustain themselves and their employees. Now, what happened after that was the conversation came up and said, what about sole proprietors? What about the contractors? What about us? So then they added, when they updated and released additional funds, and they, when I released additional funds before that, they revised it and said, okay, no problem. At this specific date now, sole proprietorships can also qualify and they can apply for PPP now as well. So the payroll protection program really is, that is, you know, in terms of what it is, that is what the payroll protection program is. Okay, and now they have also just voted and approved the second round of the Paycheck Protection Program. Now, in regards to the second round, now, before I even say this, let me just say this, because I know a lot of people are going to ask this. If you did not get PPP the first time, you are eligible to apply this time for PPP. If you got PPP the first time, you are also eligible to receive PPP this time. Okay, so the requirements are different. You must have been in business, consistent determination is that you had to be in business as of February 15, 2020. And that is important because you need a bank statement as of 2020. Again, people not operating and having their books in order. Keep in mind, this is me saying from the LLC's corporation S corp perspective. If you're a sole proprietor, then absolutely positively you can use your personal bank statement. But if you are not, then you can't just say, oh yeah, I'm an LLC here, take my personal my personal bank statement. They're going to say this doesn't match. You can't use it, right? So that is, that's pretty much that general. Now, if this is your first time applying for the payroll protection program, hold on, I'm sorry guys, I have a piece of hair that's bothering me. Okay, so this is, if this is your first time applying for the payroll protection program, pretty much if you are a sole proprietorship, you want to make sure that you are able to provide your 2019 Schedule C. They are going to determine, so how the amount of the loan that you qualify for is determined by taking the average of your annual salary and then multiplying it by 2.5. Okay, so in that instance, let's just say if you have 100,000, if you have 100,000, let's say $100,000 salary for yourself, then you would qualify for a $20,000 loan, right? That of course PPP is forgivable. We'll talk about that.
I was gonna ask about that.
Loan, because that's what it starts out as, right? It starts out as a loan. So I just want to, it's a loan. So pretty much, if this is your second time applying, let me go back to first time. Your first time applying, you're going to need your payroll documents. So your 940s, your 941s, those payroll documents are super important. Your payroll provider should be able to provide them to you. I have a relationship with ADP. They were phenomenal when it related to PPP and getting all those documents and getting everybody the things that they need in the reports and the schedules and all those things. They were amazing at that. So, your payroll provider, I'm sure by this time everyone has it together. I'm sorry, I don't know. But I'm sure by this time, it's not funny, Jalen, but I'm sure by this time, everybody has it together in regards to, getting you all of those documents. So again, let's recap. Corporation, S corp, 2+ member LLC, LLCs, you need to have payroll documents of 940, 941. Those are payroll tax documents. And if you are a sole proprietorship, then you are going to go based on your Schedule C that you have on your taxes. Okay, so that's okay. So that's important. When as it relates to second round of PPP. So second round of PPP, you pretty much need all of those documents that I just mentioned that you needed for the first round when you were approved. And you need to be able to show that that your business suffered a 25% reduction quarter over quarter. So not quarter comparison for year over year, meaning that if you are going to look at, if you're going to provide quarter one of 2020, then you must provide quarter one of 2019 and show that in 2020, you have your income, your sales were 25% less. So since they are, once they show that they're 25% less, then you are able to qualify. Keep in mind, especially my people that's in hospitality, which I thought was amazing, they are doing PPP 3.5 times the salary now. So yeah, so every other industry, so hospitality, you get, well, restaurant industry, anyone at the NAICS code 7072 that starts with 72, you are able to get 3.5 times whatever your annual salary is. Okay, and that's key. That's important, right?
Yeah.
Because that's a significant amount more than you were getting. So let's say that same $100,000 salary that I was just referring to, you're now getting, 29,000. You're now getting like 20. Yeah, I think I did the math the other day. I think it's like $29,000 versus $20,000, right? So that's additional money that you definitely can receive. And so that is super, super key. For everyone else, it's still 2.5, but you can apply again. Now let's talk forgiveness.
Mm-hmm.
Now, for the forgiveness, anything less than $150,000, they just released another application. I have been trying to keep up so that I can help clients apply for forgiveness. And every time, I swear, like right a week before they were going to go and they started talking about the new stimulus, I said, you know what? I'm going to wait because I don't know what's going to happen with this forgiveness. And lo and behold, they released a new forgiveness application, right? They keep making it simpler, which is great. But at the same time, I just have so many clients who are on the edge of their seats. Like, this started out as a loan. I want to make sure that it's forgiven. I want to make sure that things are in. And so, it's one of those things where they did release a new application. A lot of the lenders are not, do not have the new application integrated yet. So they are waiting to see exactly what they can, when they'll get it. And most of them is saying like end of Q1, end of February. So we'll see. But the idea is that PPP can be forgiven.
Mm-hmm.
You want to make sure that if you are operating as a sole proprietorship, that you are going out and getting that. If you do have payroll and you are single member LLC, if you are an LLC or corporation or S Corp, that you're out there and you are getting your money. I have so many clients who are like, yeah, I have 35 employees. I didn't apply though. I'm like, what? Are you crazy?
What?
Are you crazy?
Yeah, you should have get that.
Someone like last week, he was like, yeah, I have 35 employees. I'm like, employees, not contractors, right? He's like, no, I have employees. I'm like, you're crazy. You missed so much money. He's like, yeah, that's why I'm talking to you now because my last accountant didn't do that. And I'm like, like, what? If you have payroll, like you have to, like you should have done it. Like that is.
So I want to ask. Okay, we all got questions.
Yeah.
So like, I'm gonna ask mine first. So like with the payroll, people that do have payroll, is there a certain are there certain stipulations that they have to follow in order to get that forgiveness? Because I know I was reading a few things from I know they mentioned, they said something like is 60% of the money that you receive have to be given to payroll. Are there any other requirements?
Yeah, so at least 60% has to be provided and allocated to payroll. You also have to keep in mind that there's also a requirement for full-time employees. So let's just say when you applied for PPP, if you had 3 full-time employees, and then when you go for forgiveness, you have 2 full-time employees, that's going to be taken in consideration and reduce your loan forgiveness. So keeping in mind that at minimum, at least 60% has to be allocated to payroll. And then, your employee count also matters. Another thing as it relates to PPP forgiveness and, what it can be allocated to, it can be, you can do rent, you can do utilities, any operational expenditures. They actually just expanded it. So any interest on your mortgage. So let's just say if you had a mortgage under your business, you can allocate out and pay your the mortgage interest, not the mortgage interest can also play a part in terms of the forgiveness. So yeah, there are guidelines and there are things that you have to keep in mind. And so that's why it's really important. And then what I also want to talk about a little bit, just back up for forgiveness. because a lot of people feel that they had a period. So you have a period, which was either 8 weeks when they first started, but then they extended it to 24 weeks. So with the PPP, you are given like a period where you have to spend this money. However, you are not required to file. You have all the way until your loan matures to file for forgiveness. Depending on when you filed, your loan will mature in 2 years or your loan will mature in 5 years. So that's really important, right? Because everyone feels like, oh my God, I have to apply right now. So that's why when I talk to them, I'm like, it's okay. You know, we're gonna let them. Hopefully, this is the last application that they put out. You know, and then we do still have time to make sure that we get those things forgiven.
Okay, Jared, what your question was, my brother?
Well, I was just going to ask her to expand a little bit more on just payroll and setting that up legitimately for people that aren't as familiar with what we're talking about in a general sense.
Absolutely. So it is very important for, and when I did this was another thing that I'm like, I have to communicate and, you know, because I realize that people don't understand the difference between an employee and a contractor. Okay, so your employee means that you are paying payroll taxes on them. You know, 100% of what they do and how they work and how they operate is solely based on your company's rules. When you have a contractor, that contractor may be task-based, right? 100% on how they do it, what computers they work on, which way they do things may not be dependent on your business. They have a goal, and that goal is to deliver you whatever it is that you need to deliver them, right? So that's the first thing. You have to understand the difference between a 1099 and an employee. In regards to getting set up, I have an amazing relationship with ADP. I actually have my own designated rep that works at Brooks Alliance and kind of take care and handles all of my clients with just kind of getting over there and getting set up. Now, in terms of what it looks like to get payroll set up, you need a tax ID number, you need a legal business name, you need a bank account. I stress this bank account a lot tonight. Everybody gets a business bank account. So you need your business bank account. And it really is, and I always encourage people to go through payroll providers. It's just the best. They do everything for you. So when you do have, you get set up, you're processing payroll, you decide, whether the person is an hourly employee, whether they are an annual employee, an annual salary employee. And then you pay them every single week. You can set it up automatically. You can go in, you can, put in whatever amount that they're going to be paid. Another big part of payroll is payroll taxes. So those payroll taxes have to be filed quarterly. ADP does that. They file the taxes quarterly for you. It's like clockwork. I tell people all the time, I don't do payroll taxes. Hire ADP. I don't do payroll tax. I'm going to charge you way more than ADP is going to charge you because I don't even do payroll taxes. That's a service clients ask about, and I'm like, no, it's not a part of the stream. That's not a part of the stream. I don't like payroll taxes, right? So, but ADP, they do a phenomenal job at just getting your taxes filed quarterly, filing your annual taxes, getting your W-2s out, getting your 1099s out. And that's another thing, 1099s deadline, February 1st. If you have a contractor that you need to get 1099s out to, I can assist you. But you need to make sure it's not an expensive service, but it is a service that needs to be done. The penalty is like $50 if you're 30 days late. I think $150 if you're more than 30 days late. But if you file before August and then after August, it becomes like some ridiculous penalty amount. Right? And it's like just for you not filing. Like I charge $17 to get your 1099 filed. No matter how you look.
That's a worthwhile investment.
That is.
And I see we have a question. They're asking, what if you're just starting your LLC? I started in March of 2020. Am I eligible?
No, unfortunately you are not. You had to have your business by February 15th, 2020. So if you started in March, then you would not be. And so that's what I really hated about this new round of stimulus. I felt like it should have included like your
People after that
2020 a
date?
little bit more. I feel like they just use the same thing and, they're going based off the same amount. But I guess in theory, if you sit back and think about it, if you were already operating and affected, then I guess, I don't know. I didn't really like it, but yeah,
Yeah.
no, you wouldn't. You would have to be in business already as of February 15, 2020.
And the question I had earlier when we was all trying to ask the question was, so you was talking about the customer or your client that had the 35 employees,
Mhm.
and you're like, if you have employees, you should automatically apply. But what if they didn't lose throughout the year? What if they did make money throughout the year?
Well, for the first round of PPP, if you're applying for the first time, you're not required to show that 25% reduction in
Oh,
sales.
Hold on,
That's only if you're applying for the second.
hey, baby. We ain't got discussion here that 25%.
That's only if you're applying for the first time. So if you're applying for the first time, then it doesn't matter. I mean, sorry, that 25% is only if you're applying for the second time. But if you're applying for the first time, you don't have to show a 25% reduction.
Well, thank you so much for clearing that up.
Yeah.
No problem. Drinks on you guys next time I see you.
Yeah.
So all right, I do have just a few more questions on the PPP just to wrap this thing up.
Okay.
For anybody that's unfamiliar, how do they apply and when are some of the deadlines?
Okay, so when you can apply? That's a tricky question.
Isn't it just open?
Okay, so let's say I'm gonna put out what it has on paper, and then I'm gonna give you guys the real, right? So on the 11th was the first day that like minority banks, and that's what I think a lot of people got a misunderstanding of. Everyone was saying, okay, well, minorities can apply. It was the banks that serve in minority communities. And like community banks, they were the people that if you were applying for the first time, you were able to start applying on Monday. And if you are applying for the second time, you'll be able to start applying tomorrow. The deadline for PPP is March 31st. Now, that money is not going to last past 3 weeks. I want to say 2, but I'm going to be modest and say 3 weeks. The money is not going to last to March. So if you are going to apply. You have to consider the first round of PPP money ran like that, right? And it's going to happen again because you have all the people that applied the first time that's able to apply the second time, and you're able to have new people apply, right? So because you have all these people that's able to apply, that money is not going to last very long. Another thing is the banks, right? So depending on who you bank with, that's going to determine. A lot of these banks, let's say like the community banks, if you don't already have a banking relationship with them, you can't just go and walk in and say, hey, I want you to do my PPP. You need to have some sort of banking or existing relationship with the bank. So, if you have a relationship with them, great. Like, you can go ahead and you're able to get first dibs. I don't know. I was first thinking that they were going to open up tomorrow, the other lenders, but I don't know. I'm thinking probably Thursday, Friday. But whenever that is, we need to just be ready. We need to be ready because that money is not going to last long.
Hey, look, we in line, baby. That's all I want you to know. We in line. I'm gonna be at the door.
Hey, y'all.
You gonna be at the
Shaquanna,
door?
I gotta say thank you on behalf of everybody. Y'all drop a gem for Miss Business if y'all appreciated any of this information.
I gotta give it a hand claps,
man.
man.
This is very, very.
Oh, thank you.
Our people definitely need this. That's why we call this Tax Talk Tuesday, the re-education of Black America. We need that. We need this information. So Shaquanna, before we wrap this thing up, I just want to ask you, for anybody that's interested in working with you, can you let them know about your information sessions, how they can get tapped in with you there and learn more about
So I host information sessions every Thursday, 7:30 p.m. Eastern Standard Time. If anybody is looking for the link, you do have to sign up. It's also a Zoom call. We sit on there for about an hour to 2 hours. And I pretty much go through my process, what it's like filing with me, what that looks like, my pricing, all of those things I go through on there. I started doing those information sessions because my calendar is booked through April, and I don't want anyone waiting that long to talk to me. So I had to get these information sessions. So it's been good. I get about 100 to 200 people in there every week. And, you know, we kind of talk about what that's like. So if you guys are looking to work with me, my website is missbusiness101.com. So ms.business101.com. Hold on. No, I just said my Instagram name. Hold on. Miss Business. Okay.
It's in her bio on Instagram too.
No dot. So msbusiness101.com.
I ain't gonna lie, I was thinking, I was like, damn, how
I'm
she
like,
got 2 dots
no,
in her
you know what? Let me tell you something. I own the domain ms.business. I just haven't. So at first I owned missbusiness101.com, and then I happened to see that miss.business was available. So I purchased it, but I just never transfer everything over to that domain. So that's coming. I'm going to do a whole rebrand. I'm going to drop the 101 and it's just going to be Miss Business.
I like it. I love it.
Hey, you know you official like a ref with a whistle, man. I got to.
Right.
Y'all gotta give with Miss Business.
Yeah.
But look, y'all, before we wrap this thing up, a couple of house cleaning items from VWR. As always, y'all, thank y'all for tuning in. Appreciate everybody that tuned into this live, YouTube live. This is our second time on here.
Yeah.
Thank you to Shaquanna for coming on.
Dropping these gems.
Definitely, y'all be on the lookout for this next month. We're gonna be doing this next month. It's not gonna be as late into the day. We're gonna do 6 o'clock Central Time, 7 o'clock Eastern time. So that's gonna be next month. Don't make me lie to you on the date. I should have had it written.
This is gonna be the second Tuesday of February.
Second Tuesday of February. We're gonna be back. Other than that, y'all tap in with our book, our products, all that good stuff. Y'all can get all that link in our bio, in the show notes. Other than that, y'all, I ain't really got nothing else.
Yeah.
I appreciate y'all. And as always, these David, Jalen,
and Jared, and Shaquanna.
And Shaquanna signing out.
Thank you.
Peace.
Thank you so much, Shaquanna.